Good morning. My name is Scott Irwin. I'm an agricultural economist here at the University of Illinois, and welcome to this FarmDoc webinar this morning. It's entitled Corn and Soybean Stocks, Acreage, and Balance Sheet Implications. And we will be here for the next hour. We have about 30 to 35 minutes of material to present, and then we have questions that you can submit during our presentation. We see that a number of you have already submitted questions, and we ask that we would you would keep submitting those as we go through.
Our title is different than what we advertised. Is what we.
Oh, I see that. I see that we've changed the title slightly. So some of our materials said New Crop Corn and Soybean Marketing Decisions. That's now slightly different, but the subject matter of the webinar is still the same. Do remember that our presentation materials will be available at the FarmDoc webinar site. We will have the PDF of the slides available shortly after the webinar today, and the entire video of this webinar will be available sometime tomorrow. And so you can go back and review all aspects of the presentation. And we also want to acknowledge we're grateful to First Farm Credit Services here in Illinois for their generous sponsorship of this webinar series. So let's get started with an overview of the reports from yesterday. I'm going to cover the grain stocks report. This is the figure for the U.S. corn stocks on March 1st, and we can see that that figure came out to be 7.745 billion bushels, which was well above the stock level from a year ago on March 1st, which is no surprise given the large crop that we had in 2014. But the real surprising element of the report was that came in somewhat above what the trade was expecting at 7.609 is the number that we report there on the screen. So the stocks number was 136 million bushels larger than the average trade guess. How does that surprise compare to what we've seen in recent years? That's what we see here on Figure 2. And the 136 million turns out to be only about the fifth largest surprise in absolute value since 2006. We can see it several times. There were much larger surprises. So we certainly have an interesting situation where the surprise was relatively modest. It wasn't small, but it wasn't big either. And yet the corn market dropped very sharply around 18 cents yesterday. So what's going on is the obvious question. The key is the implications of that stock number for feed and residual use of corn. What we can do with these stocks numbers is by taking the change in stocks from December 1st to March 1st, we get an estimate of the total amount of corn that was used during the quarter, and then we can compare that to the first quarter, and we get total consumption, and then we can subtract from that known data on exports, ethanol, and other industrial uses of corn, and we imply a feed and residual number. And we can see that implied first half of the 2014-15 marketing year feed and residual use for corn was 3.640 billion bushels, according to our calculations, which was actually less than the first half use of a year ago by about 125 million bushels. And that was certainly a surprising outcome, particularly in the light of growth in livestock numbers. And so it has the appearance that for whatever reason, we have weak feed and residual usage of corn going on right now. Now, it is an interesting point. That conclusion depends on how you interpret that number, 3.640. Is it a bullish or is it a bearish number? Depends on these statistics. And we see a very interesting pattern in recent years where the first half feed and residual use going at previous to the recent boom in grain prices from 96 through 05 averaged about 64% of the total feed and residual use during the year. So we would feed more in the first half than the second half of the year for a couple of reasons. That bumped up a little bit from 06 through 09 to an average of 68%. But then look at since 2010. That number has been 74%, which certainly seems to be fairly anomalous. That basically is implying that we're using 3/4 of the corn that we use for feed in the first 6 months of the marketing year. We've got just some pretty odd readings on how high that number has been, and 2013-14 is Exhibit A. So going forward, a critical point in interpreting the stocks number is basically how much of the total use for the year do you believe that figure represents? And to give you an idea of how you can reach different conclusions depending upon your view of the rate that feed and residual use is proceeding is seen on Figure 4. So the first row shows that if you assume that the implied feed and residual bushels that were implied from the March 1 stocks represented 74% of the annual usage, then you would project that 14-15 marketing year feed and residual use as a total would only be 4.9 billion bushels. And if you go to the bottom of the slide, you can see that that's almost 400 million bushels less than the current USDA projection for 2014-15. And that indeed is, I believe, the way that most market analysts have interpreted that stocks number by just simply projecting that 74% forward. That would explain why prices have dropped so sharply in the last day. But what if instead we would ease back towards the 68% that we observed from 06 through 09, and there you see that gives us a figure of 5.353 billion, very close to the USDA's. And if we would go all the way back to 64%, which is what we observed before the grain boom, we would have almost 5.7 billion bushel feed and residual use projection. So you can get very reasonable interpretations of the March 1 stocks implied feed and residual use that range from very bearish, using 74%, to very bullish, using 64%. So that's the key uncertainty in terms of interpreting that March 1 stocks figure. It's clearly at the present point of time that the market is taking the view of it's 74% or thereabouts until proven otherwise. I am personally somewhat skeptical that we will continue at a level that high. So let's turn our attention now to soybeans. The March 1 soybean stocks figure that was reported by the USDA was 1.334 billion bushels. The average guess, according to Reuters, was just only 12 million bushels above that figure, so very, very close to market expectations. And when we convert that to the surprise figure, we can see that the 12 million bushel surprise was well within the range that we've experienced in the last decade and on the smaller side. So this, not too surprisingly, didn't have a very large market impact. We can do something similar in soybeans that we do in corn. We can imply first half and second half seed and residual use as we go through the marketing year. With the March 1, we can, of course, only do the first half of the marketing year. And this category includes the use of soybeans for seed and residual use. And there is something really interesting pattern going on in soybeans where that basically largely residual use implied by the March 1 stocks was very large at 263 million bushels, which even dwarfs some of the larger numbers we have seen like in 2010 and 2013. So as we look at that figure, we can get to some pretty interesting conclusions. We can basically reach one of two conclusions as we look at that big number, 263.4. Either that's going to have to be offset in the second half of the year by a really large negative residual, or this could be a signal that the 2014 soybean crop was overestimated. We have looked at the correlation historically between first half seed and residual use and then subsequent revisions to the crop size, and unfortunately it doesn't provide much of a guide. But the current positive residual is so large that we wouldn't be surprised if we see some downward revisions in the 2014 soybean crop when we get to next September. So with that, I want to turn it over to John Newton, who's going to talk about the acreage aspects of the reports yesterday.
Thanks a lot, Scott. I appreciate it. So let's just jump right into it. If you look at the acreage summary for the principal crops, CRP, and prevented plantings, we see that from 2014 to 2015, principal crop acreage has dropped by 2.1 million acres to 324.8. Then if you also look at CRP, we're losing 1.3 million acres from CRP. We have zero here for prevented plant, and that gets you a total acreage in 2015, for the principal crops, CRP, and prevented plant of 349.1, about 1% lower than what we had in 2014. And so you can see several patterns emerging here if you look at the principal crops, the CRP, and the prevented planting. First, you see that the principal crop number, it does have some variability over the years, but it's not a significant decline in 15 from what we witnessed in previous years. Again, it's only a 1% decline from last year. We do see a pattern in CRP acreage in that it continues to decline year over year. That's noticed in the middle figure with that downward trend on CRP acreage. Combined, the CRP and prevented plant, we see that there is some variation year over year, and we do see a steep decline, 8 to 9 million acres in 2015 from what we saw in 2014. And that brings up an interesting question. I'm going to bring Darrel in real fast. And just, Darrel, can you give me some insight on why you think and why we should think that prevented plant right now should be zero?
Well, we've entered zero into the equation here based on prospective plantings or planting intentions reported by farmers, thinking that when producers are reporting intentions, they would theoretically not intend to have any prevent plant acres, so that the total that they're reporting would be their total crop base. And ultimately, if there is some prevent plant, the thinking would be then that would reduce actual crop acres from intentions. So we know historically that doesn't work out exactly to that extent, but what we're just arguing here that farmers are not intending to have prevented planted acres when they answer the March survey.
And the range on prevented plant historically that we see here is about 1.4 million acres to as high as 9 million acres year over year. So, you take an average of 4 million prevent plant, that may be on the higher end, given if you don't expect any type of adverse weather that would delay planting. If you look at total intentions for corn and soybean acres in 2015, we have 173.8 million acres of corn and soybeans planted across the U.S. in 2015. Obviously, heavy concentrations here in the Corn Belt for those acres. Total acreage for corn and beans down 464,000 acres from last year. And then if you just highlight the red states, those are the primary corn and soybean production regions where we have production above 10 million acres. There's 97.5 million acres in those states, and that represents 56% of the total acreage for corn and soybeans intended for 2015. How does that relate to prior year 2014 actual plantings? And we see that across the western Corn Belt, we see pretty significant declines in corn and soybean acreage planted. About 1.3 million acres are coming out of the Dakotas, Nebraska, and Kansas there. We see here in Illinois, we're losing about 100,000 acres of corn and soybeans. Iowa's up 100,000 acres of corn and soybeans, and then you look at Minnesota there, almost an outlier of sorts in that they're up 450,000 acres of corn and soybeans combined. There are 22 states where we see fewer acres than what we had last year, and then 26 states where we have the same or more acres than what we had last year. And you can break that out into both corn and soybeans. If we look at corn, we see that the number yesterday was 89.2 million acres of corn intended to be planted. That's above the average trade guess of 88.7 million acres of corn. And so that combined with what Scott went over, helped to lead to some of the negative price pressure that we saw in the market yesterday. If we look across the country on where the corn acres are intended to be planted, again, we see that Iowa leads the country with 13.6 million acres of corn. Illinois second at 11.7 million acres of corn. Again, if you highlight those red states in the Corn Belt, we've got 54 million acres of corn, and that's 60% of the U.S. total. Now, looking back from last year, corn acres are going to be down about 2%. From what we saw in 2014. And if you take that with what we've seen in recent years, that's going to be 3 straight years of corn acre declines. Where these declines occurring, the most significant one's going to be there in South Dakota, where they're losing 600,000 acres of corn. North Dakota's losing 100,000 acres. Illinois, we're losing 200,000 acres. In the states that we have 25 states across the U.S. where we're actually planting fewer corn acres, and that's going to be 2 million acres total coming out of states where intentions are actually less than what they did last year. There are 23 states where we expect to see the same or more corn acres planted. Now, this is just the intentions. It doesn't necessarily represent what's actually going to happen, and I think certainly if you watch the market, what happened yesterday may change actual plantings in 2015. And so if you look historically, how do actual acreage differ from the March intentions? We saw just last year there, 1.094 million acres fewer than what the March intentions had indicated. So could we see fewer corn acres in 15 than what we see in the March intentions? That's certainly a possibility given the recent market environment. On the soybean side, we saw that the USDA reported 84.6 million acres of soybeans, and that's below the average trade guess of about 86 million acres. I know the average trade was anywhere between 83 and 88 million acres of soybeans, and the USDA did raise their number up from the Ag Outlook Conference of about 83 million acres. So while the soybean acreage increased, it certainly wasn't as high as the market had anticipated. Where are these soybean acres being planted in 2015? Again, you see heavy concentrations in the Corn Belt, Iowa leading the way with 10.1 million acres of bean, Illinois second at 9.9 million acres of soybeans. If you take those red states where we have the most heavy concentration of soybean plantings, those states represent about 60 million acres, 71% of the U.S. total soybean acres. Now, what's important here is the 84.6 million acres of soybeans planted or intended to be planted in 15 represents a record. And last year, 2014, was also a record. And compared to last year, we're up almost 1 million acres from 2014. Where these acreage changes occurring for soybeans, we see that South Dakota is going to maintain the same soybean acres. North Dakota's losing 1 million acres. Here, Minnesota is picking up 150,000 acres, Iowa's picking up 200,000 acres, and here in Illinois, we're picking up 100,000 acres. So you can see that across large portions of the Corn Belt, we do see shifts out of corn and into soybeans.
Should we answer that now?
Finally, just looking back at intentions minus the actual plantings, we see that certainly the actual plantings and intentions can differ quite a bit. So there is room for actual plantings of soybeans to increase from this number. We certainly saw that occur last year, where actual plantings were about 2.2 million acres higher than intentions. And given the recent price declines, we see that just yesterday the corn-soybean ratio increased to 2.37 on the back of that huge corn price decline. So that could change intentions somewhat as we enter into the actual planting season. And I think, Darrel, we've got a question here that we're going to go ahead and answer right now.
Yeah.
And the question is, why is there such a sharp decrease in corn planting in the Dakotas? It's not April Fool's, is it?
It is. We're done.
No, the big changes in South Dakota, 600,000 acres. I suspect what we're seeing there is it's not an increase in soybeans compared to last year, but I would guess some increase in other oilseed crops, probably some increase in spring wheat, and probably some additional idled acres. The argument being that with low commodity prices, marginal land might be not planted this year to row crops. And I think that's kind of being played out primarily in South Dakota, but a little bit in North Dakota as well. You also all have to recognize that there is sampling error in these estimates. These are based on surveys, and if you ask a different group of farmers the same question in that state, you might get a slightly different answer. But I think it's mainly a switch to other crops and some idled acres.
I'll add to that, Darrel, and one of the things, if you go back and you look at intentions minus actuals, one of the things we see is that in those Dakota areas, that's where some of the largest changes always do occur. So I would look for that to maybe change by the time we see an actual number.
Yeah, and I think that's where prevent plant may play a role as well. If typically, particularly North Dakota, is where we get the majority of prevent plant acres, and if we see a big change in actual plantings compared to intentions, it may be in that prevent plant.
All right, now we're going to get into the balance sheet with Darrel, the celebrity among us.
Thank you, John. We kind of laid the background here. We really can't go into the implications of yesterday's report until we get the numbers out there and provide some analysis of what those numbers imply about consumption and so on. But what we intended to do then was to take the stocks estimates, take that to the balance sheet for the current marketing year, and say, is there any reason to argue with the March USDA WASDE report in terms of their projection of consumption, carryover stocks, and price? And so we added a second column there, and what you see is it's identical to the first column. What we thought might happen is with the stocks report, we could argue that we could change the projection of feed and residual use. And as Scott said, some people have interpreted the report that way. In our case, we're suggesting that there's not yet enough evidence to say that the 5.3 billion bushel projection is incorrect at this point, given the variation in seasonal pattern of use. And I think importantly, given the increase in livestock numbers that we're seeing at this point, a fairly large increase in the winter pig crop, those will be fed during the last half of the marketing year. And I think it suggests that we will see a little heavier use than normal in the last half of the year. So I don't think there was anything in the report that changes the old crop balance sheet at this point. We don't have evidence that outside of the report that we would change, for example, the projection of ethanol use or exports. So we're leaving it the same. And I think the implication for old crop prices is kind of a continuation of the very narrow trading range that we've seen since the first of the year, really since we came out of the October lows. We've seen corn prices in a very narrow range. And based on the balance sheet, we would expect that to persist. But importantly, price direction will now come from new crop prospects and the new crop balance sheet. So if we're looking for price direction, I don't think it's really going to come from the old crop balance sheet. It's going to come from the new crop situation. So using the numbers in the March intentions report, we want to kind of form an expectation of how big the 2015 corn crop might be. As John indicated, actual planted acres of corn will likely differ from intentions, but we're just taking intentions at face value here. And then we would want to adjust those planted acres by how many acres will get harvested for grain. What figure 20 shows is the historical difference between the number of acres planted and what gets harvested for grain. It varies some. You see spikes in dry years, but on average, about 7.5 million acres difference between planted and harvested for grain. So we would take the 89.2, subtract 7.5 to get a forecast of harvested acres. Then the real question is, what's your expectation for corn yield in 2015? At this juncture, I think the best projection is just a trend of historical yields. We argue that a linear trend is still the best fit over a fairly long period of time. And if we just project that forward to 2015, that would suggest a yield of 164 bushels, would be about 7 bushels less than we harvested in 2014. So we can take that acreage and yield projection to a balance sheet for 2015-16, and that's highlighted in the right-hand column here on figure 22, 89.2 million acres planted. We would project 81.7 harvested, 164 bushel yield, 13.4 billion bushel crop. That's down 816 million bushels from last year. What about on the consumption side? We would argue that if we maintain feed use at 5.3 billion this year, we should be able to hold that level next year. I understand from the intentions report that we will have more competition from other feed grains, perhaps particularly sorghum, but we're also seeing continued expansion in livestock numbers. And with a fairly large crop, we would expect to see fairly large residual use of corn next year. So 5.3 would be our projection for the upcoming marketing year. Domestic processing use, we would keep ethanol use of corn at about the same levels this year. Total food, seed, and industrial use, I would bump up about 20 million bushels of non-ethanol use of corn. Basically, that's the long-term trend increase, moves with population, so a very modest increase there. Not a lot of certainty about export prospects, but assuming we reach the 1.8 billion this year and that we have a little less competition from world grain production in the upcoming year, then we want to bounce that number up just a little bit. And we can argue and debate how much that should change. We've put in a fairly modest increase of 25 million bushels. And as I said, would not put a lot of confidence in that number right now, but I think directionally that's correct. And so that says that total consumption of corn we would project to be slightly higher next year than this year by about, 45 million bushels. Importantly, that would reduce our ending stocks by over 300 million bushels from what's projected for this year. And I think below that kind of trigger level of 1.5 billion bushels that we always talk about as kind of the comfort zone, whether we have a surplus or shortage of corn. Kind of the 1.5 billion bushel level is what most of us think about as what turns us from an ample supply to a questionable surplus of corn. That would be 10.6% of our total consumption, down from 13% this year, and I think would project to higher average corn prices next year. And we've been at this projected level for several months now, in the 420 to 425 range, and I think that's still a fairly reasonable projection for next year's average price. That is above the current market price. That is above the price guarantee from crop revenue insurance. And I think, in our judgment, says the market is currently a little undervalued on new crop corn. So if we were putting this in context of making marketing decisions, we would argue that we would not want to be aggressive forward sellers of new crop corn at this point because the price is below our projection and it's below the insurance price. We kind of have a natural option in place there if you're taking crop revenue insurance. And so we're saying for forward pricing decisions, we would look for slightly better opportunities as we move through the planting and growing season this year. On soybeans, again, kind of just repeating what we did on corn, we have the USDA's WASDE projections on supply and consumption, and then what changes might we make coming out of the stocks report. And as Scott highlighted, the importance of the stocks report is that it implies a very high level of seed and residual use of soybeans so far this marketing year, and that's either going to be offset by a large negative number in the last half or a change in the crop estimate. Right now we've acknowledged that by using a larger seed and residual use of soybeans than projected by USDA, 140. That's there's no real justification for exactly where you would put that in, but I think looking at the historical level of seed and residual use, you would have to say that that right now we're going to use more in that category, which would ultimately result in a lower estimate of last year's crop size. That won't happen, if it does, until the September stocks report is released. But it would suggest that year-ending stocks of soybeans might be closer to 360 million bushels rather than the 385 projected by USDA. That doesn't change the average farm price for the year. I think a majority of soybeans have been priced at this point. I think the stocks report, along with the acreage report, suggests that soybean prices are going to find some pretty good support at current levels. I don't look for substantial declines and would imagine that we might see modest increases in the cash price of old crop soybeans here over the next couple of months. Not a big move unless we see problems with the new crop. So going to the new crop balance sheet, again, taking the difference between planted and harvested acreage, we see that the difference is historically fairly small, although in a reasonably large range, anywhere from 600,000 acres to almost 2 million acres difference, depending on the type of growing season we have. We would use, going forward, probably a difference of about 800,000 acres this year, representing some kind of average. Use a trend yield on soybeans that we calculate at 44.6 bushels. Again, that would be well below the record yield of 2014. And then take that to a balance sheet, and all the numbers are there. The planting intentions, our projection of harvested acres. I've got an incorrect number for the yield. I still show 44.8. That should be 44.6. As a yield projection, would give us a projection of a slightly larger total supply of soybeans for the upcoming marketing year than we had this past year, even with a sharply lower crop because of the change in the beginning stocks. We were basically ran out of old crop beans last year. We're going to have a plentiful supply of old crop going into the 2015 marketing year. On the consumption side, consumption record large this year, in my mind, doesn't leave a lot of room for expansion next year. And so I've penciled in only small increases in crush and export. But ironically, if seed and residual use of soybeans comes back down to a normal level, then you have total consumption slightly lower than this past year. A build in ending stocks to almost 400 million bushels, which is 10.7% of consumption, and projects to an average price much lower than what we've experienced this year. We were using a number of 975. That's about equal to the insurance price on the board. But in the cash market, that would be higher than implied by the crop insurance price. That's a bit higher than the market is offering at this point. And from a marketing standpoint, would basically be in the same camp as corn. We'd be a little patient on new crop sales at this point until we get further into the planting and growing season, particularly with the comfort of crop insurance as kind of a support here for revenue going forward. So when we look at the overall implications here of the reports, what the report said is fewer soybean acres, or more soybean acres, fewer corn acres, but not as many soybeans as the trade was looking for, and more corn acres than the trade was looking for. Larger March 1 corn stocks. Some debate about what that means for feed use. For the balance sheet, fairly large crops with trend yields. Stocks would build in soybeans but decline in corn. That projects to higher corn prices, lower bean prices next year. But in both instances, we would suggest that we're probably going to have better opportunities for marketing the 15 crop than what's represented right now. That kind of concludes our formal remarks. We would ask that if you have questions that you continue to submit those, and we will try to respond to some of the questions we've received at this point. Scott, is there any particular place you want to start on the questions?
Oh, I saw one that came up asking about yields for corn that we were projecting. I see on the screen the question is, why is the yield for 15-16 so much lower than 14-15? Well, if that's a reference, it doesn't matter which crop you're referencing, corn or soybeans. It was a very good growing season here in the U.S. Corn Belt in 2014, and that gave us record yields in both corn and soybeans. And at this point in time, basically we're forecasting more of average conditions occurring in 2015, and that gives us the so-called trend yield projection, which we have as 164 bushels an acre for corn and 44.6 bushels for soybeans. And think of those as an average across a wide range of good and bad weather scenarios.
We have a question regarding the corn export projection for the current marketing year. As we said in the balance sheet, that's at 1.8 billion bushels. And the question is, isn't that projection too high? Where will the demand come from? Pointing out that China's buying sorghum. What we look at right now is the pace of exports and the pace of export sales. And also you would look at the difference between what's being reported by USDA in the export inspections and what's officially reported by Census Bureau. And so here's the three things you see right now. Our pace of shipments is a little slow in order to reach 1.8 billion bushels. Sales on the books are fully adequate to reach 1.8 billion bushels. And Census Bureau estimates of exports are currently running, so far this marketing year, running nearly 60 million bushels above the USDA's export inspection number. So I think, citing competition from sorghum to China, competition from other sources of grains, but I think that's the reason that exports are only at 1.8 and not at 2 to 2.1 billion bushels this year. So we still have some time to go, but I think we have sales in place to reach the 1.8 billion bushels, and I wouldn't look for USDA to change that number, particularly in next month's WASDE report.
Right. I'm going to answer the question, would you be patient on wheat also? Some of that, of course, depends on which kind of wheat you're talking about, guys. But I think I get the general gist of the question. My personal view is to also advise patience on wheat, in particular because of the developing weather situation in the Great Plains of the U.S. We had an extremely poor HRW wheat crop and winter wheat crop in the U.S. in general. And I would point any of our listeners to the webinar today. Last week, Darrel and I had a fairly lengthy article on FarmDoc Daily on exactly this point about winter wheat yields. So if you want to know more, just go look at the articles from last week on FarmDoc Daily. But what we see, particularly in Kansas, is a remarkably similar dry weather pattern developing in the heart of the winter wheat belt in the U.S. right now. Maybe a little relief in the next few days from some of that dryness. And so there's obviously, we're not quite yet to the really critical yield determining period in winter wheat, which is mainly in April and May. But there's real potential there for wheat yield problems in winter wheat in the U.S. like we saw last year. Obviously, things can change, but at the present time, it looks a lot like last year. And that's clearly part of the strength that you've seen in the winter wheat prices in the futures markets recently. So if that situation would continue, we could see some real fireworks in the wheat market as we go through the spring.
Just a point of clarification in response to a remark here, the price projections that I have in the balance sheet are in fact for average U.S. farm prices rather than, it's not a futures price, average futures price projection. Some comments about the acreage numbers and particularly the CRP acres that's coming back out. That's always a mystery what happens to that CRP acres. So there's no really way to account for that other than in trying to do a total accounting of all acres. Does the CRP come back into cropland? Does it stay idle? Does it go back to pasture land? For the current year, the expiring CRP contracts are relatively small. I think 1.2 million acres that came out of CRP last fall. So some of that, I'm sure, will go into pasture for grazing and perhaps hay, as we've seen some expansion in cow numbers. Wouldn't expect that all to go into row crop production.
Darrel, I was just going to add one comment on there. To get answers to that level of accuracy on those kind of questions, we just really simply don't have quite the data to do that. But with continuing advances in satellite imaging, I think that we are approaching the day when we will be able to answer those kinds of questions on more of a real-time basis and be more accurate. But right now, we just don't have the data.
I was going to chime in here, Darrel. Just from your perspective, you've given us an average marketing year price for corn and beans, but around that average, what kind of things could happen to lead to a higher price in corn and beans, or even a lower price in corn and beans?
Yeah, make two comments in that regards. Even with even if the average price is close to our projections, we would expect that during the marketing year and perhaps leading up to the start of the marketing year, that prices could be in a very wide range around that average. You take this year, for example, big crop, low prices, yet we've seen nearly $1 a bushel range in the spot cash price of corn during the year, and the range in soybean prices have probably been close to $1.50. So even if we're right on the 9.75 and 4 1/4, you would expect to see bids during the next 18 months probably in the range of $1 around that average price. What could change the average in our mind? I think in general, two things. One is if we're wrong about old crop consumption and that we end up with stock levels at different than currently projected, either higher or lower, that would affect new crop prices, obviously. But the big one, of course, is weather and average yields and the size of the crop. As we know from history, there's potentially a wide range in where we end up on crop size. And if we're significantly higher or lower than currently projected, that obviously will change our price projection.
Mm-hmm. Another one I think that's a real wild card going forward for the markets is the supposedly upcoming decision by the U.S. EPA, Environmental Protection Agency, about the mandates levels under the renewable fuel standards. This seems to be off of most people's radar screens at the present time, and that's very understandable given delay. But the EPA seems to be committed to actually announcing the RVOs, or what they're known as renewable volume obligations. Those are the specific rules that govern the mandate levels on an annual basis for 2014, 15, and 16 by, quote, the end of spring. That could be end of April, end of May, end of June. But sometime in this time period, I think by the end of June at the latest, they're going to issue these, and those standards have been the subject of a truly titanic political battle in D.C. It's still ongoing. Darrel and I have written quite frequently about this topic. Our personal view is that this could be a fairly dramatic bullish surprise to the market if the EPA returns those standards no later than 2016 to the levels that are mandated in the statutes, rather than cutting things off at the E10 blend wall, which was in their preliminary proposal for 2014. This in particular could have very dramatic implications for world vegetable oil and soybean markets because of the potential additional pressure on biodiesel production in order to fill some of these gaps in the standards. A lot of uncertainty where that's going to be actually headed, but that's, I think, one of the most important things to monitor in the next few months, what comes out. And the one thing we can be, I think, fairly certain of projecting is, Darrel, when those final decisions are made, they will be quickly leaked before the official announcement is made.
If history is any guide.
Yeah, we'll know them long before the official release.
We have a couple other questions regarding acreage and world production. One question is, should we expect silage acreage for corn to be different this year compared to last year? And, a couple ways to think about that. We do see some modest increase in dairy cow numbers this year that might argue for maybe we will need a few more silage acres to feed cows this year than we have in the past. And the other point of that is the difference between planted acres and harvested for grain also includes abandoned or acres not harvested for anything. And I suspect that was a very low number in 2014, given the growing season we had. There's some late harvest, but we didn't really have any extended drought areas. So that difference, taking the silage and the abandoned together, you might argue that the difference between planted and harvested would be slightly larger than average this year. I don't think it would be big enough really to change the balance sheet on corn very much.
Darrel, I think every time I've sat with you in any type of meeting, we get this question, and it's always a good opportunity to address it again. Can you talk about your perspective on why you do or don't monitor the U.S. dollar with respect to trade?
I think there's a couple reasons that currency values are important, and Scott may want to weigh in on this as well. I mean, directly, when you look at the export market, you would argue that a stronger dollar, everything else equal, makes U.S. corn a little less competitive in the world marketplace. Also, I think we may see this year that, I haven't seen confirmation, but rumors that because of the strong dollar and weak Brazilian currency, that we may see a little bit of corn move in to the east coast of the U.S. from Brazil. So it does affect that category directly, but exports have become a smaller and smaller percentage of our total market for corn, so that perhaps the currency values are not as important to the balance sheet as they have been in the past. It may be more of an indirect impact in terms of we do export a lot of pork. A higher dollar value may affect that demand to some extent, which then in turn might affect hog prices and then corn demand domestically. But that's a pretty lengthy chain to get from currency values to corn demand through livestock. But you have to acknowledge that a strong dollar relative to competing currencies is a slightly negative impact on total consumption of our products.
I was just going to add also, despite the headlines, you have to consider the current really bump in the value of the dollar relative to its long-term trends, and it's not increased by anything near some of the strength of the dollar that we've had. Basically, it's better to think about it. The dollar had become very, very weak and now has recovered a little bit. And so I don't think those moves are enough to really threaten substantially our competitiveness. But it's certainly something that bears watching. And the U.S. ag sector is still an export-dependent sector through some of these indirect linkages. Darrel and I have written a lot about ethanol exports. There's something that could change those economics because they're maybe potentially more marginal. And so I think those indirect links are probably the most likely place.
And Darrel, when you were talking about the exports, you said that exports for corn are a relatively small portion of the balance sheet. So you don't look at the currency value as much. But on soybeans, exports 30-40% of soybean consumption. We're exporting 1 billion bushels to China. The value of the dollar certainly has to have more of an influence there, would you think?
Yeah, there's more I don't know about that than I do, but my understanding is that even South American soybean exports are really traded in dollar currency values in the world market, so that the currency changes there are not quite as important as you might think. So yes, some negative impact would maybe some of the same influences on soybeans as we're seeing on corn might argue for a few more South American soybeans or soybean products finding their way into the east coast of the U.S. But at this juncture, you really don't see the impact of that in terms of export demand, export sales of U.S. soybeans with remaining quite robust.
We have another question here, and this one, maybe I should get Coppice or Snicky on the line here with our farm bill, closing up here. What is it, next week? So it says, based on current assumption of yields and expected revenues per acre, which program are U.S. farmers more likely to adopt? And that would be ARC or PLC? And could that change farmers' decisions to plant until the end of April? And I think, the first part of that is CBO baseline projected 60% in Ark County and 40% in PLC. It's just a national average. But the other important factor is that both of these programs are paid on base acres and not on actual planted acres. So I don't see to what extent your program participation decision would impact what crop you actually plant.
I see one other question that we haven't covered. I know we're getting close to the end of our time here. Someone asked earlier, question said, some advisors out there were saying that corn prices could be at least $1 higher a year from now if demand continues at current rates, and carryover could be around 1 billion bushels for 15-16 for corn. If you had 1 billion bushel carryout projected for 15-16, I could agree with the $1 higher, but even if we get a positive surprise from the EPA on the renewable fuel standards, I have a hard time seeing how that could come from the demand side. I think that would probably require some kind of fairly substantial drop in corn yields in the U.S. below trend, maybe kind of from 164, maybe 158, 159 might do it. But it would take crops like we had in 2011 and 2013, I think. Darrel,
No, I think that's a good observation. I mean, based on our balance sheet, we're looking at a carryover just under 1.5 billion. So if you're going to take that under 1, you've got to either increase consumption or reduce crop size by 500 million bushels. And if that comes from crop size on 80 plus million acres, you've got to take our yield projection down 5 or 6 bushels to get that 400 or 500 million bushel drop in ending stock. So certainly that's possible. I mean, 158, 159 is where we were 2 years ago. So 3 years ago in 2011, before the drought of 12. So there's a wide range of possibilities on yield at this early juncture.
Yeah, that's one point. I would just add a personal comment, Darrel, that we're using a 164 trend yield on corn. That's probably below what most people are using in their balance sheets, and that's also probably partially why you see the market and many others having larger stock projections for corn in 2015-16. At least we have the merit of being consistent. We argue that you should use the long-term national trend and that we don't see any substantially improved drought tolerance in the crop overall in the U.S. And the way I put it, if someone believes those kinds of hypotheses, then tell me how 2012 happened. I think if there's another potential wild card, it was a great question earlier, is I think there's a little bit of amnesia going on about 2012, assuming those kinds of scenarios simply can't occur. I don't think it's any more or less likely than it was standing here in the same date in 2012. It's the same. It's a small probability, but when it does happen, it's a huge hit to yields. I think there's a little bit of a tendency for people to bump their trend yield expectations up based on this idea that the new hybrids and genetically modified stacked varieties are more drought tolerant than they were in the past. And personally, I just don't buy that. I don't know if John or Darrel, you want to add to that little editorial speech or not.
I would ask, just from you, both of your experiences, how often have we had 2 whopper crops back to back? Last year was a really big crop. How often have you seen that happen back to back? And would you expect that to happen again this next year? Or do you think many people are out there praying for a drought?
Well, I mean, in terms of the kind of deviation from trend on corn yields that we saw this year, we don't see those back-to-back historically. A slightly different but related question is, can we have consecutive years of above trend or below trend yield? Right. And absolutely we can see that. And we've seen runs of 3, 4, 5 years of above or below trend yield. So, but you don't see the 10, 12 bushel deviations from trend back to back.
Yeah, we could say that's a very unlikely scenario, because to get those kind of super crops takes combinations of good weather, being above average precip and cool temperatures, particularly in pollination and grain filling time in corn, that just simply don't occur very often. And so to get those twice in a row means, well, I guess you'd have to be shooting three-pointers like Wisconsin did last weekend in the basketball. I think our time is up. We really appreciate all of the people that tuned in for this webinar this afternoon. We want to emphasize again that we have a downloads page at the FarmDoc site. It's listed on this final screen. You can go there shortly after the webinar today to get a PDF copy of the slides. And then sometime tomorrow will be a complete full video replay of the webinar and the Q&A session. And that will be up there for your use. And again, thank you for attending and listening today. And we also, of course, want to thank again our generous sponsor, First Farm Credit Services. We greatly appreciate their help in making this webinar possible. Thank you and have a good day.